Hello everyone and welcome to TBR's first Business Intelligence and Analytics Business Review webcast, diving into the recent results of TBR's BI and Analytics Benchmark Report. For the remainder of this presentation, we'll be referring to Business Intelligence and Analytics as BI and Analytics. I'm Brittany Desmond and I'm hosting today's webinar. As part of the software team's expanding coverage, we are pleased to announce our new BI and Analytics Software Vendor Benchmark. This benchmark will apply TBR's business lens to the BI and analytics market, providing our clients an in-depth view into the state of the market. We're looking forward to answering your questions and helping you grow your business through the information we will provide in the benchmark. Before I pass this over to Stuart and Allan, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it to our YouTube site, TBRI channel. We encourage you to visit our channel and to watch this presentation or any of the others we've posted. Second, we'd like to hear your opinions and thoughts on the material we're presenting. Please send any questions or comments through the Q&A or chat function. Allan and Stuart will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to Stuart or Allan at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides, as well as our thought leadership pieces, webinar decks, and commentaries on SlideShare at slideshare.net/TBR_market_insight. And I'll provide all these social media links again at the end of the presentation. Now let me introduce Allan Krans and Stuart Williams. Allan has been covering and writing about the software market for over 7 years and is leading our research coverage in private hybrid cloud. Stuart leads our software and cloud research team and has been influential in developing Source IT, a cutting-edge research program focusing on buyer behavior in verticals like retail, manufacturing, healthcare, energy, and utilities, among others. Together, their strategic advice is helping several of the largest cloud vendors identify new opportunities and revenue streams. And with that, let me hand it over to Allan.
Great, thanks, Brittany. So as we get into today's presentation, I want to start with some background and context for the report that we're covering today, which is published based on 4Q12 data and looks at the leading 18 vendors in the space. So from a segmentation perspective, the areas, so we're covering the market overall, but focusing in on 3 distinct segments. And the way that we've defined this taxonomy looks at the solutions themselves and is based on a number of our customer studies that looks at adoption, not just of the traditional segmented BI and analytics, but all the tools available to customers as they go out and accomplish the tasks which roll up under BI and analytics. So it runs the full gamut, starting at spreadsheets, which we continue to see as one of the core tool sets that in reality drive a lot of the BI and analytics analysis that goes on within firms that we cover, straight through the more emerging segments around cloud, social analytics. So it really covers the entire spectrum of the tools that are used to accomplish these tasks. A couple caveats as we look at things like market sizes and the vendor performance within these segments. We're not including data warehousing, which obviously is a key supporting element of BI and analytics solutions, but we're really focusing in on the tools that reside on top of that in the analytics and business intelligence space. So with that, I wanted to set some of the context because we hear a lot about how important BI and analytics are from a vendor perspective, from a marketing perspective, but our coverage of this space really originated in a customer study that we did that looked at, again, laying out all the tools that are available, how people were adopting these solutions, how those rates differed as you looked at different segments of the market, different customer sizes, different customer verticals. So we've benchmarked customers across their adoption of BI and analytics tools and come up with a curve which we have in front of us. So I think this is important context and speaks to, is a visual illustration of just the amount of opportunity that we see coming in this market and driving the growth going forward. So when we benchmark customers, we segmented them into 4 quadrants. First, starting on the left, there are customers that are not as bought into BI as a strategic tool for their business, and that they also do not plan to change that strategy going forward. So we see them as lagging. They don't have a lot of the standard tool set that we saw most of the market already using today, and don't plan significant investments going forward. Now, I want to shift over to the right-hand side of the chart and look at any of the line that's in green are customers that have really been early adopters of BI and analytics, have it ingrained as part of their corporate culture and how they drive their business strategy. But within there, we see those customers that are going to continue to invest in the leading category and those that are going to taper off investments in the slipping category. Now, I think the most important quadrant, left it to last, is that improving segment. Those customers that, when we speak with them, feel that they're behind in this area. They want more access to their data. They want to make better decisions more quickly based on it. And to do that, they've planned significant investments over the next 18 months in order to accelerate their use of BI and analytics tools within their business. So when we look at the market opportunity that's being created for vendors to go out and address over that time period, a lot of it is from these customers in that improving segment. It's the largest segment of the market. Most customers do not feel like they have a real proficiency and advantage in terms of using BI and analytics. So that's where a lot of the growth is going to be coming from. So that just sets the baseline for just how important we see the segment is for both the customers and the vendors, and what will drive the opportunity around this moving forward. So with that, I wanted to go into our review of the 4Q12 benchmark, starting with the overall market opportunity and sizing, both for the overall market and for the vendors that we're covering. So here we've laid out a combination of, for the 18 vendors that we're covering, and it really runs the gamut from the large multi-line vendors, the IBMs, the Oracles, who have coverage across all these segments, drive businesses around the supporting elements and the services, through the more emerging players, vendors like Good Data, Jaspersoft, that are smaller, more solely focused on BI and analytics, but have a business model, an offering set, and a growth in the market that led them to include, so we get a good mix between the big multi-line vendors right through down to the more emerging players. So those vendors that we're covering are represented with the bars in this chart. And based on that, based on our customer studies, the vendor coverage that we've done, we've been able to come up with our own market estimate for the size of these solutions. Now, again, the caveat is it doesn't include data warehousing. It doesn't include all of the database revenue, the supporting elements that are out there, certainly not most of the hardware revenue that's generated around them. So this is the pure BI and analytics view. And as you can see, we do this across multiple market segments. And so when you look at these relatively small gap between the overall market and the vendors that we're covering, really speaks to the consolidation that's occurred in this space over the past 5 to 10 years, the power that the big players bring to it, and that we're really covering the majority of the market as we look at the 18 vendors that we've identified. Moving forward, we're actually going to be increasing our coverage in the space. We've launched this study in 4Q12 with 18 vendors. We're going to continue to add to that vendor coverage with the next iteration of this in 6 months to really close that gap and add another 10 or so vendors so that we're covering 25 to 28 vendors and really representing the majority of the market in terms of the revenue that's generated, certainly the profit, and looking at the predominant strategies that are being used in order to do that. So in addition to the vendor coverage, we're looking at in an environment where most of the vendors we cover face a very difficult task in terms of generating growth, identifying opportunity that's both large enough and growing at a rate that they can improve their top line. BI and analytics as one of those segments that's really attracting a lot of interest because of the growth that's going to be enabled here. So when we look at moving forward, obviously growth occurred in 2012. You'll see it as we lay out the vendor performances in this area. And we project that to continue in 2013 with the market exceeding $20 billion for the aggregate and increasing double digits. You don't see a tremendous amount of markets that, one, increase at that type of rate and also have some sustainable margins to make it a profitable growth for these companies. So again, we've covered it from the customer side, here from the vendor side and the market side. Really important space, so that's what led to us going forward with this benchmarking market landscape and initiating coverage of it. So with that, I'll hand it over to Stuart Williams, Director of the Software and Cloud Practice, to take you in through some of the body of the report.
Great. Thank you very much, Allan. So we've set the stage for the view of the global market for BI and analytics software and vendor performance. This section of the presentation is going to look deeper into the performance of individual vendors, both from a revenue and a profit point of view. Overall, we see strong double-digit growth in the BI and analytics space in calendar year 13. Essentially, we see vendors taking their offerings and really mapping them against customer-led buying trends. As Allan pointed out, there's headroom in the marketplace right now for advanced and emerging BI offerings. We see a lot of coverage already of core elements, but there's still ground to be made up to close the gaps in that area. So customers are well aware of the spread that they need to cover, and in many industries, they're looking to BI and analytics as one of their key workloads where they're making investments in order to better monetize the data that they're streaming through their business. So the first point that we want to make here is that both revenue and growth leaders are monetizing a feature-focused investments that are aimed at the install base. So we've talked about, we've demonstrated the gap in coverage in the install base, or they're positioning BI products as interoperable with their customer environment. So we see that largely within the multi-line vendors, but some of the pure-play vendors, their value proposition is that they are truly agnostic and they can pull data from any source. So those are two of the key drivers that we see among both the revenue and the growth leaders. The second point here is that the revenue growth leaders are extending their investments beyond R&D. So they're moving past just a technology value statement and into go-to-market tactics that are designed to galvanize regional or segment growth. So what we see here are industry-specific product segmentation and regional go-to-market tactics that are designed to drive business expansion. And then the third point here, we're really projecting that the market by 2015 for the BI and analytics software segment is going to exceed $25 billion, which is very strong growth. It's sustainable, and we're going to see in this presentation some of the profitability that some of the vendors are driving. So there's an opportunity within the headroom of the market to grow both revenue and profit over the next 3 years. So we go to the next slide, set of slides. We're going to take a look at some of the different issues that are going on here. So let's take a look at the growth perspective. The vendors that we're covering in this initial inaugural BI and analytics report, we believe exceed 70% of the software market, the relevant software. So the traditional vendors make up a very strong percentage of that total revenue that we're mapping, and the pure plays are there, and they're influencing growth, they're influencing customer behavior, and really beginning to drive the more emerging and advanced solutions. We see firms making acquisitions in this space. IBM has been a consistent acquirer, building its strong BI and analytics business over time by making acquisitions. We don't see that slowing down. Other vendors are adding to that, and we do anticipate some consolidation among the pure plays as they begin to get the cash flow up to the size where they can take each other out and consolidate. So the market revenue drivers, leaders are driving this growth, looking at the high interest features to extend their share of wallet. So we see, the mobile BI, cloud BI, self-service BI. These are key items that folks are looking for, but dependent upon those are data extraction and ad hoc, the ability to do ad hoc queries that tie back into the available data sets. So these are all elements that are tied to each other in a value chain. If you see the pure play growth leaders really bringing their point solutions to market to really tackle a customer's problem. So they're really looking at solving a business and analytics business problem. And then they're able to spread that across multiple BI revenue segments. So they're able to customize their particular speciality and drive that into multiple market segments, which helps them to obviously drive and sustain their high growth performance. So the next couple of slides are going to present some of the revenue pictures, and then we're going to take a deeper look at some of the profitability. So slides 12 and 13 are going to take a look at the leaders in both overall absolute dollar growth and then in percentage growth. So here we see really three firms driving the absolute dollar growth here. Off the chart, actually, way off to the right, we see IBM and SAP with absolute dollar growth in the quarter for IBM of over $400 million and SAP of $159 million. The revenue there are well over quarterly revenue for BI Analytics are 1.6 and just over $1 billion. So those are very, very strong growth leaders. Following them is HP Software, which grew on an absolute basis due to acquisition in the last year. We look to see that absolute dollar growth rate slow when they get into that year-over-year purely organic revenue performance. So they will drop closer to the axes. Also showing strong growth are SAS, Oracle, and Microsoft. This rounds out the top 5 of our leading core BI vendors, and they're the vendors who have the largest BI businesses. Now we have a suite of smaller vendors who are driving strong performance. So when we look at the vendors here, we see Good Data, Pentaho, Tableau, and ClickTech, who are all leveraging unique points of view, either open source or open access across multiple databases, or new ways to visualize information that are very, very popular in driving strong business growth for these firms. These firms in particular, we believe are opportunities, targets for potential acquisition over the coming year. We're watching their performance with strong interest. So the next 2 slides also present business growth, but here we're also mapping on the horizontal axis there the BI operating margin. So the leaders in this space are tightly clustered off onto the right. We see Microsoft, IBM, SAP, Oracle, and SAS. EMC is tucked in there as a small bubble. These are the vendors who have both scale in their business and breadth and cross-selling opportunity to drive their core BI and analytics software business. So Microsoft has made a few tuck-in acquisitions over time to augment their BI and analytics capability. IBM has done a significant more of that. Obviously, that they, SAP and Oracle, rolled up some of the early winners in the BI and analytics space with Cognos, Business Objects, and Hyperion, and SAS as an independent predictive analytics and very advanced analytics vendor has a strong voice in the marketplace and is very succeeding in sustaining its high value pricing, which again supports its profitability. When we go to the next slide, we're going to take a look at some of the other players kind of in the second tier, firms that are either more stable and represent a more traditional BI and analytics company like ClickTech, or high growth firms like Pentaho, Tableau, and Good Data. Pentaho, we see leveraging a business model that leverages some open source software there. Tableau and Good Data are still in a high growth mode and are reinvesting their cash flow to support growth over time. So we believe that as those businesses begin to grow up towards the size of ClickTech, we're going to see them shift to the right in terms of their profitability over time. Far off on the left, we see some smaller bubbles like Jaspersoft, Salient, and Burst. These are, again, emergent firms with high growth. And at the far left, we see Kexon, a firm that's had some struggles in the past year, and we're keeping an eye on them to see if they drift any further into the left. So that's a review of the leaders and laggards from the operating margin projection and the profitability space. The next couple of slides begin to take a look at some of our regional performance around go-to-market. So as I said earlier, a lot of the leading firms are beginning to take go-to-market strategies that leverage their install and then really bring it to market using the characteristics of the different regions. So the leading vendors are extending their investment beyond the product portfolio and really beginning to invest in the sales and distribution channels that are going to drive their geographic revenue. It's all about what the core BI install base can leverage for you, because advanced and emerging capabilities always need to, particularly in Asia Pacific, are contending with more homegrown analytical solutions that leverage spreadsheets. So you have to get past the spreadsheets and show a strong business case for BI and analytics, either ease of use or distribution, or the direct business case of opening up new opportunities. So we see the vendors who are growing in these areas are ones that are definitely taking that core capability and using it as a launching point for conversations with clients to drive their growth in emerging markets. So here we've got on one slide in the report. We actually have multiple slides that distribute each one of the vendors that we've talked about here. As you've seen some of the bubble charts earlier, this summarizes the regional markets in each one of these areas. So in the Americas, we see that the aggregate growth rate across all of the firms will be about 50%. So you saw some of the slides earlier. There's a good many firms with very, very high growth rate. Some firms are not as high. That's not the growth rate for the dollar revenue, but we do estimate that the total dollar business will drive up to $2 billion. The EMEA market, we anticipate growing the next most quickly on average across all the different vendors and expanding to $1.6 billion. We see that growth is tempered by adverse economic conditions and a very, very, very slow recovery in countries where there actually is some growth. The need for efficiency and insight into what the data that is coming into those businesses is driving a lot of redirection of IT budgets. Not to say that there isn't opportunity in EMEA, it's just justifying the business case for BI and analytics is a more difficult conversation than it is certainly in North America and Brazil, where we see stronger business conditions. Finally, in Asia Pacific, we do see some recovery in Japan recently. Also, the strong business opportunity in India and China. India in particular is what we see as the sweet spot for the Asia Pacific market. There are many firms there that have reached a business maturity that requires them to gain greater insight as they begin to take their businesses global and across multiple different customer sets. There are also firms that are growing inside of India that need to aggregate the data that comes from the millions of customers. The need there is much higher on that channel side of it. Also, we see the vendors going to the channel-driven strategy, looking for partners who can both take their product and deliver and implement their product in Asia Pacific, much more so than we see in EMEA and certainly in the North American space. So with that, we're going to take a look at some of the data that we have on vendor performance that's tied to the 3 different product-driven segments that we have, both core, advanced, and emerging. And I'm going to turn the presentation over to Allan Krans.
Great, thanks. So we've covered the overall revenue, the profitability, the geo views. The last view that we wanted to cover looks at that taxonomy that we have for the technologies themselves and calls out the performance of vendors within each of them. I wanted to start with kind of a baseline before we get into the specifics to look at overall where we see a lot of the opportunity being created. In terms of the overall size of the market, obviously the core remains a key market for a lot of the larger vendors that play in this space. The need for those technologies is not going to go away. But that for smaller vendors and a lot of the growth opportunity that's being created, it's coming from what we've termed the advanced and the emerging segments of BI technology. So going forward, we'll highlight the growth in those two. Really, when we look at what's happening in those 2 segments, in the advanced BI, there's this need to, in our customer conversations, a lot of times it's about getting the right tools in the hands of people who make decisions and allowing them to have an interface that is intuitive, they can get up to speed quickly, and have the confidence in the data to be able to use that in the course of their jobs. So within the advanced segment, the data visualization is an important element of that. And then going above and beyond the self-service use of these tools, having the intelligence built in to be predictive about trends and make decisions. Again, it comes down to making better decisions and doing that more quickly. That's the theme that comes up again and again as we look at what customers truly want from these tools. So the predictive side of it, I think, is very important. Certainly a lot to be done in terms of evolving that technology and making it easier to identify trends and to react to them is an area where we see a lot of need on the customer side and growing focus on the vendor side in terms of providing, providing more automated ways in order to do that so that you can have less tech-savvy users interfacing with these and benefiting from them. In the emerging space, this is the area where we saw the lowest levels of adoption, and a lot of the emerging categories that we're covering really look at new delivery methods, lighter weight delivery methods through cloud and BI, so that, again, it's about getting the tools in the hands of more people and doing it in a way that with cloud you can get up and started very quickly. There's not a lot of overhead in terms of the infrastructure needed to support that. It's something that we've seen predominantly with a smaller segment of the market in terms of customer size. It's a good fit. And universally with mobile, being able to not only feed information in from mobile devices but access it from mobile devices as well is probably the more emerging area that we're looking at, but certainly ties into the overall trend in mobility and will be one of the bigger growth areas for BI and analytics going forward as you kind of bridge the PC, other devices in terms of how it's actually utilized. And then lastly, within there, social media, tons of information out there. Customers see it. Allowing them to better mine that, I think, is something that's universally desired. And also read through to get down to the data quality, which we've seen as one of the biggest determiners of success for BI and analytics solutions is the investment made in terms of how the data is stored, managed, filtered, so that it's really reliable and business decisions can be based upon it. So certainly a lot to be done in the social media area there, but something that we see on the horizon for driving a significant portion of the opportunity going forward. So as we look at the vendor landscape, we'll take you through each segment. Here we're starting with the core elements of the portfolio and the vendor performances across them. Similar type of trend when we look at the segmentation between the vendors that we're covering. You have most of the large multi-line vendors off and to the right simply because their size is such that in this core space they are accounting for the vast majority of revenue from their traditional portfolios and long legacy in terms of providing the core analytics tool sets in these areas. Going up to the top of the chart, however, you start to see some of the more emerging players come in simply due to their growth in this segment. And their focus on not so much the core but the advanced and emerging segments is pulling through revenue that fits into our core BI and analytics tool set. So it's less about their intent focus on investing and growing in the traditional tools, more about the pull-through benefit that the more traditional technologies receive as they go out and promote elements around cloud, open source, those things that are in the early stage of adoption with most customers and driving a lot of growth off a small base for their businesses. When we look at the advanced, you start to see more of an intermingling between the pure play vendors and the larger vendors. So you still do have the large multi-lines off and to the right. Pure play vendors like SaaS, you start to see more elements of their portfolio tied in. And also a bigger focus around this cluster of vendors in the middle that don't have significantly high growth rates compared to the overall market, but still have sizable revenue streams and bigger portfolio plays as you get into the advanced segment. So vendors like Jaspersoft, ClickTech, Burst, Google, EMC are all in this space. They have some of the predictive advanced analytics solutions. They may not be the overall growth drivers, but still part of their overall portfolio, an important part of the business model for them. The other thing to note is when looking at the advanced, the growth rates for a lot of these vendors, more in what we see as the sustainable stage compared with as we get into the emerging areas. So the market overall, as we're covering it, is growing between 10 and 15%. And so you start to see a good distribution of vendors around that average where we see the market going forward. So more sustainable growth. This is not as much influenced by big acquisitions or a small revenue base, more sustainable businesses as you get into the advanced segment. Lastly, in the emerging space, a couple things to note. Obviously, the bubbles become a lot bigger, fewer vendors that are off the margins, really at an early stages with adoption for most customers in these areas. So although the bubbles appear bigger, on a relative scale, this is the smallest segment of the market. And we don't see, first of all, the size of portfolios that the vendors have in the core and advanced spaces, and also lighter adoption across the customer base just due to the emergence of this technology. It's not going to be large implementations. We've seen mostly select subset of users transitioning over to some of these technologies, and then looking for a lot of the growth in this area to come as those implementations get deeper and broader across within those customers that have been early adopters, and also a larger segment of the market embarks on journeys in terms of moving a certain section of BI to cloud, leveraging mobile technology in order to do that. So the leaders in terms of growth here, good data, which heavily promotes their SaaS and cloud offerings. Certainly a big player. Tableau, again, a lot heavier focus, more marketing-led, but still off a relatively small base for those growth leaders. We do see this through acquisition and internal integration. The larger players here will over time have an advantage in terms of building cloud and mobile delivery into their core packages, particularly in the large enterprise segment. So a lot of the technologies here aren't necessarily new from a functionality perspective. It's delivering it in a way that matches the business need. And certainly when you're starting with a core base of large technology assets, the advantage resides with those vendors in terms of shifting the delivery model, providing consumption and pricing in a little bit different manner. But at the core, it's really pulling from that legacy IP in terms of delivering the solutions. So that's the market, as we've laid it out. So just to kind of quickly recap some of the perspectives from the taxonomy view, core remains really an important part for the large mainstay vendors, as well as all those assets that we're not covering below there. They can monetize this in a lot of different ways that the emerging players simply can't. So from a business model perspective, from a distribution perspective, a lot of advantages there for them. However, the growth and shift in customer focus from the core set into the advanced capabilities, the predictive analytics, and then looking at different delivery models in the advanced, in the emerging BI and analytics space, leaves a lot of white space as we see it. It may not look big as you look at the overall market size, but billions of dollars is a lot of opportunity for some of the smaller vendors to come in and be disruptive for the larger players, claim space, at least make them look for an acquisition or some type of competitive disruption there. So certainly a lot of open space for those smaller providers to come in, cater to those advanced and emerging needs, and in the process both grow the overall market and force the large distributed vendors to adapt to that and rapidly provide more capabilities for customers to grow into as they evolve BI and analytics strategies. So with that, I'll hand it back over to Brittany, and I believe we're going to open it up for questions.
Thank you, Stuart and Allan. So we've had a few questions come through during the presentation, so let's get started. Which vendors do you see as the leaders in the market over the next 2 years?
So let's take turns. This is Stuart Williams. Well, we'll go back and forth on this because there's really two sets of vendors that we see. We see the large established vendors taking stands in different ways to drive and leverage BI and analytics. And they're going to drive business in different directions. So obviously, we see IBM using the word smarter and embedding analytics as a component across their space, as they're not in. They haven't gone all in on applications yet, though they've begun to acquire a few. Analytics is a leading value driver for them, where they can begin to take a look across a company's business and attach analytics more deeply, and also to begin to attack traditionally intractable problems using analytics, things like overall transportation management or smarter cities or things like that, healthcare, large analytical problems. SAP is leveraging its transition to a new architecture using in-memory to be able to drive real-time analytics. We see that as a major disruptor in the large enterprise space. They're beginning to position that aggressively, and we see more offerings that leverage real-time analytics of the old transactional, there's really no difference at this point, database. All the data for the company will be in one large in-memory database that can be accessed. So there's an innovation there. Oracle, we see taking a slightly more nuanced approach where they're beginning to look at different degrees of information between hot in-memory information and all the way back through cold information, and leveraging both in-memory technologies, flash, fast storage, and cold storage technologies to give people a little bit more influence on the levers, the cost levers for driving BI and analytics. They're also deeply embedding analytics into their applications portfolio for reporting and other elements, as well as including more social analytics pieces in the space. Microsoft, we see has a huge opportunity. The recent refresh across the Microsoft portfolio for database and applications and the expanded BI and analytics offerings that were rolled out last summer are really just hitting the market right now, and we see Microsoft really driving their partner-driven ecosystem to begin to drive those sales across their business footprint, which is going to largely fall in the mid-market. So we also have a whole series of disruptive vendors that are beginning to step in. That's another category of vendors, a great many of whom are represented here. So we have firms like Google and Tableau and among others.
Sure. Yeah, I mean, it's certainly, so I think there's a gap between those vendors that provide niche functionality that will grow to a certain degree. But in the end, I think it'll be difficult for them to really broaden their perspective to an entire suite and look at solutions focus, which I really think is where most customers want to be in terms of getting insight into their data. Some of the vendors that I think could have a longer-term impact, one of them we don't even cover in this space, it's Amazon. So looking at their movement up the stack, starting with just the pure compute and storage capacity, now getting into things like data warehousing, some limited analytics capabilities. When you look at cloud vendors that have the capability to scale, that have the customer base already, we talk a lot about selling into the customer base. It's a focus for a lot of the vendors that we're covering. Certainly on the cloud side, Amazon has that customer base and could be a long-term disruptor in terms of providing more and more analytics capabilities, tying it very closely to the data that they're already processing on the cloud side, and being able to scale and be a long-term competitor in that space.
Great. Moving on to our next question. Do you see an opportunity for silicon hardware vendors to have an opportunity to offer value in connected devices through security and manageability?
Yeah, good question. This is Allan. So I'll start in and then see if Stuart wants to add to it. Certainly, I think not just in BI and analytics, but I think there's an opportunity for computing in general for the silicon providers to certainly have an impact on a variety of trends that we see impacting IT today, things like bring your own device, transitioning right over into how that can be enabled through BI and analytics. And I think one of the use cases for that is not just on the device itself, but also on the back end, the impact that things like in-memory has had and will have in terms of, again, it's about speed. A lot of times that can be the big benefit that's brought to bear, and that is something that is highly desired by customers that we've spoken with about how, where they want to go with BI and analytics. So to the degree that the hardware can be an enabler of processing information more quickly, allowing for trend analysis, getting to some of the predictive capabilities that improve quality and improve time. I certainly think that hardware is a key component of that, even whether it's delivered traditional on-premise or through the cloud. The hardware that it resides upon can certainly differentiate BI and analytics and play a role in terms of the overall value prop for those customers.
Yeah, this is Stuart. It's certainly a compute-intensive workload, particularly the closer you execute the BI and analytics to live transactional data, as well as intermingling both structured and unstructured data in the analysis. Another key piece certainly is the user space. So we see new, all of the mobile devices and new form factors with high resolution displays and high bandwidth networks, really enabling these the field workers and the end users. They should begin to try to get access to meaningful data over the course of their daily job. So when people are, for example, in retail, we see a tight coupling of BI and analytics and new mobile-enabled business models. When people are looking to do price comparisons, these are the actual end customers. They want to look at price comparisons. They want to look at availability for purchase out of inventory, and they want to have an optimized delivery choice, right? Do I want it 1 day, 2 days, 3 days, with a price attached to it? There's a lot of analytics that can go to mixing all of that information plus information about that customer, their previous buying patterns, that can begin to both optimize that individual transaction and to begin to sustain total lifetime value for that customer, right? So there's a trade-off between giving the customers what they want and maximizing the value of an individual transaction. So yeah, we see big changes in BI and analytics as we drive into the future, both from kind of business data as well as the data that's coming from the universe of intelligent devices, right? So we see machine-to-machine data flowing into the background and really beginning to reshape in the cloud the kind of predictive analytics, customer-facing and end-user predictive knowledge that's going to flow out in the future. So getting people information when they need it is going to be a key piece.
Thank you. Now this will be our last question today. How big will cloud delivery be for analytics?
So this is Stuart. I was just talking about that. So for example, we see Google coming to market with personal assistant software that looks through all of your Gmail, looks at your schedule, looks at your friends, looking at all of the data that they own, that you think you own, about you, and being able to give you reminders and information relevant to both your position in space and your appointments as you move through time, giving you timely reminders as it gets to know you. That is a feature of analytics software, but it's so deeply embedded that the person just gets the result, and that's kind of the ultimate. I don't need to know that it's there; it just gets me information that's meaningful when I need it. So we see cloud delivery, particularly to the edge consumer, as meaning could be a business user as well as a true consumer in the space, being increasingly more and more driven. We think about this on from another example, devices like the Nest thermometer that collect information about the heating and cooling of your home. It collects information about you, learns about you, and it has the potential to share that information back through different communities to learn about consumption patterns, exactly what's being done for information in the space. So yeah, cloud is a key enabler of kind of new forms of mass analytics.
Great. Thank you, Stuart. And thanks everyone for your questions. You can follow TBR on Twitter at the handles listed here, and please check out our pages on SlideShare and YouTube. Before you sign off, we'd like to ask you to take a brief survey about today's webinar. We're incorporating your feedback into our webinars to improve our performance, and your opinions are very important. We'll leave the chat function open another 5 minutes to give folks a chance for any last-minute questions, and we'll see you again next quarter. Thank you.